Hopefully everybody can hear me, and thank you again for joining our webinar today with Tim Harrison, CEO of Ionic Rare Earths. We'll just give everybody a few more minutes or another minute or so to join the webinar. So far we've got half our recipients joining. And thanks, Tim. I appreciate you taking the time out to present to us today.
Oh, that's not a problem, Steve. I mean, it's an easy story to tell.
Yeah, we've got. I think we should get going. It's over 9 o'clock now. We've got half our registered users in. So without further ado, I'll pass it over to Tim to take you through his slideshow, and there'll be no questions during the webinar. So if you've got any questions, please write them in the chat, and we'll answer as many as we can at the end of the webinar. And if we don't get to all of them, we'll answer you via email. And thanks again for joining us.
Excellent. Thanks, Steve. Thank you, everyone, for joining us this morning. I'm just going to step through a few slides on the project. Most of this is material that's been already presented to the market. Just gives me an opportunity to, I suppose, put a bit more colour around the mineral resource estimate and activities that the company's working on. So just a disclaimer. Just a quick overview of the company, corporate snapshot. So we've been trading at all-time highs, currently a market capitalisation of 185 million. We're a bit over 13 million in the bank, and well supported by our major shareholders, the board, executives and key advisors. So yeah, we've had a tremendous start to 2021. And I think a lot of the work that we've been completing over the course of the last 18 months has really started to pay significant dividends for the shareholders. Makuutu. So the project is located 120 kilometres east of Kampala. We're in a really well-developed spread of eastern Uganda, where we've got excellent infrastructure that's already available to the project. The mineralisation, being an ionic adsorption clay, is fundamentally different to the vast number of other rare earth investment opportunities that investors have access to on the ASX and other Western exchanges. As an ionic adsorption clay, it is similar to the bulk of the assets in southern China that are producing over 95% of the world's heavy rare earths. The ionic adsorption clays, clay material. The rare earths have weathered over time. So the rare earths have existed in granites on the outcroppings around the deposit. And Mother Nature has weathered the primary rare earth minerals. It's released the rare earths in a chemical form, which has been washed down into the clays. And what's actually happened is that the rare earths have bonded to the clays ionically. So it's a chemical bond, and what we're doing is in order to recover, the mode in which we recover and separate the rare earths is by washing clays with a salt solution. The salts, the ammonium in the salt exchanges with the rare earth and releases it into the liquor, which enables us to then recover the liquor, increase the concentration and precipitate the rare earth. So it's a very simple process. There's no cracking of the primary mineralisation, primary rare earth mineralisation. That's been effectively done by Mother Nature over millions of years. And what we've now got is a very long mineralisation that stretches 37 kilometres from end to end, that's rich in this ionically adsorbed rare earth content. We've recently completed our updated mineral resource estimate, which we announced to the market yesterday. 315 million tonnes at 650 ppm total rare earths. So it's a very, very large deposit. And what I would also point out is that there's quite a deal of potentially additional resources that we could add with quite simple drilling. And in addition to that, we have further exploration ground out to the east, exploration license 00147, which has the potential to add another 50% on the project scale again. We completed an interim scoping study, which we submitted to the Ugandan government, which was required for the extension of the license at Makuutu. We completed that in October, submitted it to the government, and the retention license was renewed in December. We're now working through a process of updating the scoping study, which will reflect now the larger mineral resource estimate, the larger scale of the project, with a plan to be able to report that to the market once completed. We're aiming to have that completed internally, so within the company by the end of March, and then we'll be looking to report that out to the market. The concept is one of modular development, whereby we're looking at individual modules. We build the first module, processing the ore via heap leaching, or processes very similar to heap leaching, and then we fund organic growth from the free cash flow generated from the first module. And so it's feasible to look at, starting off at around about 2.5 million tonnes per annum of ore throughput. And over the course of 7 years, we ramped that up from 2.5 million tonnes per annum up to 10 million tonnes per annum. And given the scale of the project, there's potential for further increase into the future. Road, rail, power is all immediately available to the project site. Mobile phone communications across the full tenements. So we've got extremely good infrastructure that's already there. That existing infrastructure means that when it comes to developing Makuutu, we're only really going to have to require the funds for the initial mining fleet, process plant, process facility, owner's costs and working capital. So it gives us a significant advantage in being able to bring low cost, long life, heavy rare earth production to market for a very low capital hurdle. We've got extremely good relations.
Sorry to interrupt you there, Tim.
Yep.
I want to sort of maybe just give some comparisons as far as against any hard rock rare earth project as far as initial capital outlay.
Look, I mean, it's a bit difficult to compare on capital because, typically with a light rare earth mineral concentrate, you're required to go and spend money on initially your mineral concentrator. So whether there's a flotation or beneficiation circuit, then there's a requirement for cracking and precipitation. So, we know that those circuits can be quite capital intensive. And it's also dependent on what sort of scale of project you're looking at. But I would think that the capital for the development of an ionic adsorption clay is a fraction of the capital that you would require for a hard rock, light rare earth mineral project to take the product to a similar payability. So one of the advantages of the ionic adsorption clays is because we are, it's a chemical process. We don't produce a mineral concentrate. We produce a value-added intermediate mixed rare earth carbonate product. That attracts a significant premium above the mineral concentrates. And so ultimately that translates to more money in the pocket of the producer. So we have a high value basket coupled with a high payability, which means that we end up with a very high margin project relative to a light rare earth mineral concentrate producing asset.
Thanks, Tim.
In Uganda, we've got, and we've built up over the years in which we've been operating there, extremely good relationships and good networks, from government through the local authorities, through the Directorate of Geological Survey and Mines within Uganda, local authorities, the National Environmental Management Authority, and the districts in which we're operating. The size of the project from end to end, 37 kilometres, traverses 3 of the local districts. And so the company, previous to the involvement from Ionic Rare Earths and going back across the years that the company has been developing or looking to develop Makuutu, which is now, I think the company was started in 2016, but some of our partners within Uganda have been looking at developing the various tenements going back to about 2012. So there's a long relationship there that we've been able to build upon. And so we maintain very good relationships with the communities in which we're operating, and we're working through now the next phase of the environmental and social impact assessment and developing a more rigorous and complete stakeholder engagement plan. We presently own 51% of the asset. So the nature of that ownership is that we are working in an earn-in arrangement with Rwenzori Rare Metals, which is the private Ugandan company that owns the Makuutu asset. So we're at 51%. We're earning up to 60% on the completion of a bankable feasibility study. The timing on the delivery of that bankable feasibility study, we're working towards a submission date in October of 2022. So we're a bit over 18 months away from completing the bankable feasibility study, which also needs to include the environmental social impact assessment. On the submission and the feasibility study combined with the environmental and social impact assessment form the requirements for us to submit a mining license application. And so on the completion of the bankable feasibility study, we move to a 60% ownership, and we maintain extremely good relationships with our partners in Rwenzori Rare Metals. So, I mean, just talking a little bit about the differences between ionic adsorption clays and hard rock. So on the screen there on the top left, you've got effectively 2 products. So those 2 products are produced from typically a bastnasite light rare earth mineral concentrate. So it's a light rare earth dominant product. It's from a volumetric composition. It's dominated by the lanthanum and cerium, the low value light rare earth elements, and derives 95% plus of its revenue from the NdPr content. So Mountain Pass, being an example of a bastnasite deposit, gives you an idea of the type of product. So it's very much a light rare earth mineral concentrate with a fraction of the heavy rare earth content. So when you're looking at the projects that typically the ASX investors in the light rare earth hard rock applications, you've got exposure to principally NdPr, and so there's a lot of talk always about the NdPr price, or it's an NdPr project. Ionic adsorption clays are fundamentally different. So we're not existing within the mineralisation as a primary mineral. As I mentioned before, the rare earths have been weathered from, or the rare earth elements have been weathered from the base minerals or the primary minerals over time, and have been absorbed ionically into the clay. And we're simply just washing those rare earths from the clay. And you end up with a distribution in the basket that's more even. And so with that distribution, you end up with typically a higher value, because you now have typically around about a quarter of your basket's going to be NdPr, but you're moving up towards sort of, 45 to, in this case, over 50% being the heavy rare earth content, and the lanthanum and cerium being less than 25%. So when you compare the products, you get a complete divergence in value you're still achieving the same relative value from NdPr, but the ionic adsorption clays are producing significant quantities of the heavy rare earths, which at the moment, and certainly looking at immediate production capacity, it all comes from China. And going forward, certainly with the Chinese recent export control ban and some of the dialogue around that, there's a potential that the Chinese will prioritise their own ionic, their heavy rare earth production from the ionic adsorption clays into their own domestic requirements to help them achieve some of their targets on environmental initiatives and electric vehicle requirements, which means ultimately in the long run there will be less heavy rare earths available for the international markets. So when you compare the two products, you get an understanding that they are vastly different compositions. They produce a different element suite and have a different appeal to different end users. When you're looking at the actual two types of deposits and the capital requirements and the processing and mining methods, they're fundamentally different. Typically, a hard rock rare earth project, which is your light rare earth dominant minerals, requires much more or much higher cost mining methods. There's blasting, typically at much higher strip ratios, and in some instances, you may have to go underground, especially if you're trying to follow high-grade seams. You need to then, because it's a hard rock mineral, there's significant power consumption in crushing and grinding in order to liberate the minerals, which then enable the separation via beneficiation via whether it's screening, gravity, or flotation, for example. You then take the mineral concentrate. That mineral concentrate has increased the rare earth content, so it's reduced the overall mass flow, increasing your rare earth content. But it also increases the residual radionuclides that are with the rare earth mineralization. So, for example, monazite typically has an elevated content of thorium, and in some instances you'll have associated uranium that's coming through with the monazite. You increase the concentration of the rare earths, you're also increasing the concentration of your uranium and thorium. You then have to crack the mineral. So you use strong acids, temperatures in order to break down the composition of the mineral to enable the rare earths to be chemically separated. So you take out we separate out the rare earths, and then the tailings, the gangue mineralization that's left behind. In some instances, you're dealing with sort of elevated levels of radionuclides that are now disturbed from their naturally occurring state, which now requires a strategy around the way in which you manage that radionuclide inventory. And so, we have seen some examples of that occurring whereby, for example, in Malaysia, whereby certain stakeholders, local community members, are overly not happy about having that material adjacent to their communities. And so it's a consideration, but there are ways in which it can be managed. And ultimately, the end product from that is a mixed rare earth concentrate, whether it be an oxide or an oxalate that's then converted to an oxide or a carbonate. So, there's quite a deal of processing in order to get to a payability of 70%. And then for you to go and separate the rare earths, you're basically working on a conventional rare earth separation circuit that will first separate the rare earths into a number of bulk streams, which then enable further separation of the individual elements. So it's quite complex and certainly very capital intensive to be able to do. That complexity means it does take time to build, commission, and ramp up these assets. And in some instances, it can require continual modifications as you're learning how to optimize those circuits. Ionic adsorption clays are very simple. You're basically using bulk mining methods because you've got very large deposits where the rare earth mineralization and grade is quite continuous. So you're not mining on a much more tighter controlled block sequence. You're mining on very bulk mining methods, so akin to bauxite mining. So your scrapers, bulk excavation and trucking. It's a very it's a bulk material movement exercise, and so you're able to use big equipment, and it affords you the ability to use these very simple methods and drive ultimately a very low operating cost on the mining side. You've got typically a very low strip ratio because these deposits, the weathering process means that typically the ionic clays are close to surface. So a very small layer, a thin layer of overburden, which gets moved to the side, and then you're down into the clays and you're using these bulk methods. You've then got, from a processing perspective, there's no requirement for crushing because being a laterite, it's reasonably friable. And then we take that material. In some instances, you can look at screening to try and upgrade the clays, but in our instance, there's no requirement for screening. We take that material, we agglomerate it, we put it onto a heap, we let it cure, and then we start to irrigate it with low flow rates of salts and slightly acidified liquors. The time under irrigation is typically quite short relative to copper and gold heap leaching. So you're probably looking at time under irrigation of about 30 days. And then we wash the clays to recover any residual liquors. And then once those clays have been washed, we recover the clay and we then backfill that to mined out areas. So we're looking at progressive rehabilitation. So there's no requirement for a tailings dam. Everything is going back into the pit from where it came. The liquors that are generated, we put those through membrane circuits to increase the concentration of the rare earths and salts and produce a permeate or a clean water, which enables us to recycle that around to the circuit to wash the heap or other applications of water in the process. And in some instances, when we've got higher rainfall events, that excess water will be cleaned up to a point that meets environmental standards and enables us to discharge it from the site. And so we end up taking that upgraded rare earth liquor and we precipitate it as a rare earth carbonate. So it's a very simple precipitation. And that rare earth carbonate product has got a payability of 70%, high concentrations of rare earths, and that is ultimately what we will then sell to a rare earth separator to be individually separated into the various 15 elements. So it's a very low capital relative to the hard rock applications, and the capital nature is such that it enables us to scale it up. We don't have to get to the larger plants to get the economies of scale. It enables us to go from and use a modular type arrangement, what we've called a hub and spoke. Potentially, we can look at these modules that come to a central precipitation circuit, which enables us to sort of minimise our overall cost for the project. So given these bulk methods, simple methods, we typically have a much lower operating profile, a totalised operating profile for our production. The project site itself is extremely well endowed with existing infrastructure. So, many of the projects, and certainly experience with developing, mineral projects within Australia, you've got your requirement for your process capital and your mining infrastructure and your mining fleet. And then you've almost got nearly the same again on infrastructure, getting to remote sites, building camps, airstrips, putting that in place to be able to support your workforce, running power transmission out to site. In some instances, you might be even bringing gas pipelines to site. That's not the case here with Makuutu. We have all of the infrastructure immediately available to us and immediately adjacent to the site. So we're very fortunate in that we've got about 810 megawatts of installed hydroelectric power in our local area, and that power is typically a portion of that goes on to Kampala, and another portion of that is exported outside of Uganda to Kenya. That export trunk line or power transmission corridor runs to the south through and immediately to the north of our tenements, and you can see on the presentation slide the red transmission line that runs through the tenement area. So we're quite fortunate in that we've got access to 132 kV power transmission corridors, and potentially the ability to locate a process plant within a couple of hundred meters of that. We've got road and rail, which enables us to bring logistics to achieve really good overall logistics management, low costs associated with bringing materials in and out of Uganda, and we've got mobile phone communication across the site. So, the site is really well endowed with existing infrastructure, and the location of the site means that we are in close proximity to 3 local residential centres, which means that we can draw upon, quite a large workforce if required. We're 40 kilometres from Jinja, which has a number of sort of support industries available to us, and then international airport at Entebbe. So we've got everything we need to be successful from day one on an infrastructure perspective already there. So just having a quick chat about the mineral resource estimate update and the announcement we made yesterday. That's a culmination of the last 18 months worth of drilling, dating back to the first drill program we started back in October 2019. So the company, Ionic, we've drilled 279 drill holes for 4,754 meters of drilling. So, you've got an average depth of 17 meters. So that typifies the shallow nature of the deposit. The conversion of those drill holes to resources has enabled us to announce the updated resource at 315 million tonnes, 650 ppm total rare earths. So what that represents is effectively a 3-fold increase in the total rare earth endowment in the areas that we have reported. Noting that, we've got 3 areas that we drilled that we weren't able to convert to resources at this time. However, with additional drilling in areas C, so just having a look at the slide, C, E, and this area here between the central zone and central eastern zone, cumulatively that's got the potential to add another 50 million tonnes or up to 50 million tonnes of mineralisation at some reasonably good grade. So in order for us to develop or to deliver that, we would need to go back and do some additional infill drilling in those areas. And we're just running the ruler over the timing on that. We've also got drilling which is about to start in the next 2 weeks on the eastern, or the newly acquired eastern tenement exploration licence 00147. Now, we announced the exploration target back in January, and just reiterating that, that's hugely prospective and has the potential to increase the size of the resources and potentially the project by up to 50%. So we're very excited about the prospect of drilling out there and the potential for further increases in the overall magnitude of Makuutu. Finally, I just point out that the resource estimate that we've announced has excluded the hard cap and transitional zones from the project. So the hard cap and transitional are typically the upper layers of the mineralisation. To date, the metallurgical test work doesn't show with enough confidence the ability to achieve high extraction. Whilst we've seen some significant improvement over the last 12 months, in particular the last 6 months, we've still got quite a bit of work to do with that. And so whilst there's an opportunity to bring in additional tonnage from the hard cap and transitional zone, conventionally the focus really it's the clay zone, which is typically much easier to mine and process, and that remains our main focus. So just going back and reiterating that the mineralisation covers a 37-kilometre corridor. We've tested 26 and we've announced resources across that 26 kilometres. We've got another 11 kilometres worth of testing to do, which we'll do over the course of the next, starting in 2 weeks' time, and potentially over the next 12 months, which may give us a significantly larger overall resource at Makuutu. Importantly, I'd also point out that whilst we're focusing primarily on the rare earths, the total rare earths, we do also have an appreciable amount of scandium. And so the scandium does represent a significant opportunity for additional revenue at Makuutu. And there's been a number of activities that we've put in place over the course of this year to start to explore how we can better capitalise on the scandium endowment at Makuutu and to bring that scandium to market in a way in which it gives the Makuutu project a significant shot in the arm. Our basket, so I mean we've put this slide up a number of times, just gives I think the investment community a bit of context around the balance of our product. So whilst NdPr makes up about a quarter of our basket, it probably generates a little bit less than 50% of our revenue on current spot pricing. We derive a significant amount of value from the other heavy rare earths, other than yttrium. The yttrium price has obviously been quite strong over the course of the last 6 weeks. Typically, the last 2 weeks has been extremely strong for the heavy rare earths. And I think that's obviously a sign of things to come in the longer term. So where we're looking at current spot pricing, we're around about $70 a kilo on the rare earth content alone. That excludes the value from scandium. So anything we're talking about, we're just focusing on the rare earths. Scandium is the add-on. Quickly, just having a chat about our pathway and what the key focuses are at the moment. We've delivered on the renewal of the main Makuutu Central license. The new ELs have been awarded. We've delivered now the updated mineral resource estimate. We're now working through the scoping study and bringing that up to reflect the larger size of the project. We've got the environmental and social impact assessment, which is underway. Met test work, so we're now going across the full 26 kilometres of mineralisation that we've tested, and we'll be doing a sequential program over the next 6 months to provide us with effectively a heat map that gives us an idea of what does the metallurgical extraction profile look like across the deposit. Further exploration drilling, so certainly we're kicking that off in 2 weeks' time, and that work will continue over the course of the next 3 months. On the back of that result in the exploration reconnaissance drilling, we'll have a much better feel for potential out at the Eastern License EL 00147, and it'll give us a bit of an idea of just how big or how much bigger Makuutu could be. Bankable feasibility study will effectively commence immediately once we've completed the scoping study. We're working through planning on that at the moment. We are looking at doing a demonstration plant in 2022, and so we've started some conceptual thoughts about that. The ability to show how simple the mining and processing is, I think, will be very, very useful for investors. And all of that work effectively culminating in an ore reserve that we will release later next year and submitting a mining license. And again, the timing on that mining license, we're looking at submitting that by October of 2022. After that, we work through the approvals process with the Ugandan government, and we're looking to go potentially into construction straight away, so through 2023, and then operations in 2024. So we are looking at a very aggressive schedule to bring this project to operations and to bring it to production. And I think that in itself also probably reflects the simplicity of the mining and processing of the ionic adsorption clays.
I might just cut you off there for a second, Tim, just to mention, without mentioning any names, some of the hard rock projects have been going for 15, 20 years plus. So just what Tim's highlighted there shows, you know, how quick you can move with a clay deposit and good people in place.
Look, I suppose I'll just add on that, Steve. I mean, you know, the time it takes to usually to find and develop a project, I think, you know, usually it takes about 7 years. I think that's from recollection, the typical time from when you are trying to develop a project that is technically and metallurgically a little bit more complex. That time frame increases significantly. The amount of work that you need to do to basically evaluate individual portions of the process to a high level of requirement to make sure that the engineers have the information to be able to go and design the plant. Then you get to the point where you go and build it, and it can take years to build and commission and then ramp up. And so typically with the more complex metallurgical projects, they do take a very long time to get right. And you need to spend the time doing it because typically the capital is significantly higher. I mean, fundamentally, it's a very different project to an ionic adsorption clay. You know, the simplicity of the processing, I think, is typified by the fact that, you know, through the 90s and early 2000s, there are a number of illegal Chinese illegal Chinese ionic adsorption clays put up in southern China, and as such, those deposits, you know, led to a lot of environmental damage. But the simplicity of the process meant that the illegal operations could be developed. You know, it's not rocket science, but there is ways in which we can look to exceed, you know, expectations on environmental management, and that's certainly been a focus for us in the way in which we think about the way in which Makuutu gets developed.
Thanks, Tim.
So that's pretty much everything that I had for today. I'm open to taking some questions if there's any out there.
I think you've covered most, because I put the question out there if there's any questions, and none have come back at this point. Does anyone want to add any questions now, or you can email either Tim or myself, and we'll respond in a reasonable time frame. But I think overall you've covered everything, Tim.
Excellent.
Look, thank you.
All right.
Thank you everybody for joining our webinar today, and a special thanks to Tim. Oh, hang on, there's a question from somebody. I'm not sure. Hang on, I'll just see if I can get you. There's a couple of questions there, Tim.
Yep, I see that one. In terms of size, where does Makuutu project sit in relation to the other ionic adsorption clay projects? Good question, Matthew. So I would say we are well within the bounds of what we know of both Chinese and non-Chinese ionic adsorption clays. With regards to the non-Chinese ionic adsorption clays, there's more than a handful that have been identified. There's 3 that we know of that are of a scale that's actually sizable for commercial development. There's a number of small ones that are, you know, they just don't have the tonnage to justify the capital investment and development of the project. So the 3 that we know of, there's one in Brazil, which is a very large deposit. and that's potentially a little bit larger than where Makuutu will end up. There's another one in Chile, which is would appear to be significantly smaller than Makuutu, and there's another one in Madagascar, which is actually located in a wetland environment, and as I believe and I understand, there's a moratorium on the development of that. So as far as alternative ionic adsorption clays, there's ourselves and maybe one other of this sort of size outside of southern China. Within southern China, I mean, there's data that's been released on the ionic adsorption clays. I'm not sure how current some of that data is, given that a lot of the ionic adsorption clays have been, aggressively mined over the course of the last 50 years. We know that there's ionic adsorption clay material in Myanmar and potentially other areas within Southeast Asia. Again, there's not a huge amount of data on those. So I feel very comfortable that certainly Makuutu is at the upper end, and certainly our grade is well within the data that's available on the operational Chinese ionic adsorption clays. So I think we've got a good peer comparison to see that it's been done effectively in the past, and I think we can probably look at learning and improving again on what's been done previously, certainly on the environmental side.
Thanks, Tim. And a couple more questions there.
Yes. What would be our market share in the rare earth field?
You probably just covered that.
Yeah, look, it's very hard to gauge. I mean, obviously the data that's been reported publicly from China on their quotas, in addition to that, there's other material that comes out of Southeast Asia. There's 2 other rare earth mines, one Rainbow Rare Earths and Lynas, plus you've got Mountain Pass in the US. So, there's a significant amount of rare earths that are being mined around the world. But realistically, when it comes to ourselves and our peers, being the ionic adsorption clays, the ionic adsorption clay material out of southern China, I think in 2020 had a quota of about 20,000 tonnes. So we are looking at bringing on initially 1,000 tonnes of material, potentially ramping that up to 4,000 tonnes. So we're a fraction of the current world production of ionic adsorption clay product. And as the world increases its requirements for heavy rare earths, there's going to be, I suppose, the expectation is that that supply will not be able to keep up to demand. I mean, that's just a function of, the world's projected investment on a number of technical applications. The heavy rare earths are already going to be stretched in supply going forward. So I think it creates a great opportunity for a project like Makuutu to come online and help provide some portion of supply or additional supply to the growing deficit. It's certainly not. I don't feel like we are going to have any issues selling our product.
And then just that last question on the feasibility, which I suppose is built into the BFS.
Yeah, so bankable feasibility and definitive feasibility. I mean, the terminology, bankable simply means that we can take that feasibility study to a bank in order for the project to be funded. And so the idea is that we are working through making sure that we complete the necessary requirements in the feasibility study that enable the project to achieve financing.
Excellent. Well, thanks everybody, and a special thanks to you, Tim, for making time for us today. Really, really appreciate it. And hopefully,
easy, Steve. Yep.
About clay rare earths.
Great. All right. Well, thanks, Steve.
I'm going to borrow your word again, and the unique opportunity that we have in IXR.
Yeah, well, that's right. I mean, there's nothing like it on the ASX, and there's only a handful of these ionic adsorption clays outside of southern China. So it is very rare. And actually, one of the good quotes I've seen is, ionic adsorption clays are the holy grail of rare earth deposits. I think that typifies it. They're very, very unique deposits and very strategically important in the future.
Excellent. All right. Thanks again, everyone. Appreciate your time.
Thanks, Steve.
Thanks. Bye-bye.